to the Cashflow Chronicles. I'm here once again with my main man, Chris Patel. Some may call him the Daisy God, even though he doesn't like me calling him that. But with recent showings, I mean, we'll get into it today with Verizon. I think you should own up to it a little bit. But Chris, we haven't talked about it as of yet, but I know we're going to enter something. I know we need to probably have more of a formal discussion about how we incorporate this into the channel. But Chris and I are working on something in the background, which I think is going to be pretty interactive and fun with you guys. And hopefully it gets everybody a little bit more involved. So always be sure to check back in every single Tuesday through Thursday. And hopefully, if this continues to pop off, we might do a little bit more with us. But Chris, I know when I first saw the stock, I was in a meeting. I saw the stock price after after market close, and I thought the Google earnings were going to be abysmal. And I started reading into it, and I was pleasantly surprised at how well they really did. And 11% revenue growth year over year, kicking back because they were single digits before. And I'm just continue to be amazed by the cash flow from operations from this company. Like if you like, I always have to double check. I'm like, is this a full year estimate? And it's like, no, this is through 9 months. Like the $82 billion in cash flow from operations, the 40 something billion, or maybe it was 60 odd billion in terms of free cash flow. And then $45 billion year to date in buybacks. So you start thinking, you're like, this company's going to make over $100 billion in cash flow from operations. They're probably going to buy back $60 billion worth of stock this year. Then you also recognize that the free cash flow might end up being over $80 billion for the year. You're just sitting there being like, why is this company only worth $1.8 trillion? Why isn't it up there into the twos at least with an Apple or a Microsoft? So, well, I'm sure we'll get a little bit more into that today. And I think you guys touched on it on Finance Junkies, but I'm curious to hear your initial thoughts and where you think the stock might go from here. And I also heard once this thing decides to turn around that you're buying everybody dinner in Vegas on Friday.
Yeah, good luck with that. Most of my money is going to go on the craps table. You know, if I win at craps, I don't mind buying you some dinner or something, but I don't know. The rest of these goons, you know, they gotta...
I'll lose two. I'm bringing $2,000 to losing craps. It'll be a good time.
Okay. All right. So, you know what? I think the best thing we could do is just go to the numbers. Because if we don't go through the numbers, then, you know, all we're really doing is just talking, right? So let me share Google's earnings with you guys real quick. And one of the things that, you know, we can talk about companies all day, every day until like the cows come home. But if there's no substance behind it, then all we're doing is just theorizing things that could happen, as opposed to, hey, things could happen, but are the numbers materializing in the right direction? And the minute that they do materialize, this is just
ops margin, man.
Look at this. Okay. So right now, this is Google's third quarter earnings results. Okay. So last year, this quarter, they generated $70 billion in revenue. Not even 70, it's like $69 billion in revenue. This year, they generated $76.693 billion. So you can see here 11% growth in just revenue. Companies of this size, you would not expect to be growing at this amount. It's nuts, but it does happen. And Google's one of the companies that just has this great business that just operates on all cylinders. On top of it, if you look at right here, the operating income, which is another really important metric, that means after all the expenses are paid out, how much money are these guys actually generating? These guys are generating $21.3 billion in operating income. But what's even more amazing about this business is that, you know, they had this really big run up during COVID where everyone that was just pretty much stuck at home watching YouTube and everyone was advertising with them. And their operating margins had really climbed up. But then the next year after that, they kind of went down because they hired a lot of people, you know. And if you look around, Silicon Valley just went on a hiring binge. It almost became like a hiring war where even if you didn't need the people, you would hire them just so that your competitors wouldn't get them as competition. So a lot of that stuff really resulted in Google taking some hits on its operating margin. But what I like to see here is that they're starting to return back to their traditional operating margin of about 30% per year. Well, 30% on their revenues, which means that that generates a crap ton of income. So if you see right here, this time in net income, they generated almost $20 billion in net income, and with the share buybacks, actually decreased a lot of their share count. So if you look right here on an earnings per share basis, they generated $1.55 per share of earnings. This right here, this jump is not something to like trifle around with. This is huge. Like you don't jump 45% earnings per share just like that. Like it's the business is just operating on all cylinders. Everyone is focusing on a couple of services, which, if you look at it on a year over year basis, they're actually really good. But on a quarter by quarter basis, some people were expecting more. So I think a lot of what we are seeing is just high expectations that Google was not able to meet. But it was like literally they missed on one thing. So if you look at search, which I remember last year in December, everyone was saying Google search is dead. Everyone is just going to use Bard. I mean, everyone's just going to use ChatGPT. Well, this time they generated this quarter almost $44 billion, an additional $5 billion, almost $5 billion on just Google search. YouTube, they generated another additional $1 billion. And by the way, this number, YouTube ads, is completely different from some of the other services like Google services, which I'll talk about in a little bit. Google YouTube ads right now, some people are saying that there might be some headwinds coming up for Google when it comes to like this recession, where companies are going to actually decrease their ad spend, but it hasn't materialized yet. And I don't think it's actually going to materialize. I think they have enough growth internationally to actually compensate for that, and also at the same time they have really good conversion rates. So I don't
And I
think
don't
that.
just like Reels, if you remember when Instagram first came out, people were really disappointed with Instagram's revenue because they thought it was immediately going to shoot up. And you're seeing a lot of good tailwinds associated with YouTube Shorts, and those have yet to be monetized to the extent which I think that they can. If you just scroll all day, every day on YouTube Shorts, you're not going to see one single advertisement. So just wait until the fact where every 10th is an advertisement, then to the point where Instagram now, it's like literally every fourth post is an advertisement. So wait until you get people hooked on YouTube Shorts, which I like Shorts. I find myself probably as much watching Shorts as I do TikTok these days. But I think that really the only piece missing from YouTube at the moment is that share feature between like a network of people and having a little chat box between people. And I think if you get that down, there's no difference between Instagram, TikTok, and Shorts. And I think Shorts will probably outright win.
Yeah. No, that's good. The other thing is Google right now, like last quarter, they just raised their prices on their premium, like Google Premium for YouTube and everything else. So that will be a huge tailwind into 2024, because if you think about it right now, they have last time I checked, they had close to 80 million YouTube Premium subscribers, and this year it might actually be almost close to 100 million. So even if you just raised it $2, like YouTube Premium, like the price, what ends up happening is that $2 times 100 million ends up being $200 million. 200 million times 12, that's $2.4 billion of high margin revenue that's going to be coming into your metrics. So this right here is just their revenues of growing. Their other bets division, their revenue is not necessarily material, so it's not a big thing. But I think the thing that really took a lot of people caught a lot of people off guard was Google Cloud services. So Google Cloud was actually growing pretty well into last quarter, but this quarter it kind of slowed down a little bit. And let me show you this other 1 second.
I think it was 22%, I think is what it grew up.
Yeah, let me show you this right here. So this, okay, so if you see this is Google's cloud revenue. Okay, so revenue has been growing at a pretty brisk pace, and even this quarter it actually grew. It just didn't grow as far as a lot of people were expecting. So they wanted to see like 8.6 ish $1 billion per quarter in revenue. The problem was that it didn't get to 8.6. It got to 8.4. And the reason why is it was actually covered in the earnings call, which is one of the things that they want to do is make sure that they're optimizing their client spend to make sure they're getting most money. I mean, most value for the money that they're spending. And they're taking the long view approach to this as opposed to other cloud providers, where they're saying, look, we want to be your partner, which means that we're going to work with you to make sure that you're not utilizing resources that you don't need. And I think the reason why they're doing that is, one, because they're in third place, and in order to win market share, you need to make sure that you're giving customers a differentiated product, whether that be a physical, like really big differentiation in quality, or a price point, which, makes more sense to your bottom line. So Google right now has stopped with this thing with up until Q4, which was, we are going to grow at any cost, even if we lose money. So right here, you can see that they were actually losing money for quite a bit, but that money, those losses have actually translated now into operating income. So this will be an interesting metric to watch, because I was actually expecting probably another at least 0.5 to 0.6 billion dollars, which is $600 million in additional operating income coming in from Google Cloud. If that number had come in with $300 million more of operating income from Google Cloud, dude, we'd see a 10% higher move on Google as opposed to 10% lower. But I mean, that's just how things are sometimes. Put the other one back up real quick.
Yep.
Yeah. So this is the main thing, and overall, man, where's their damn, I want to see liabilities. Those are fine. Assets are fine. I want to see their cash flow statement, because I think that, so, okay, year to date. So if you look at it on a year to date basis, which is another good example of how they're progressing, their net income has actually been growing pretty fast too, right? So if you look at the share counts, last year to date in September, they had 13.18 shares, 13.11 billion shares outstanding, right? If you take it on a diluted basis, it's 13.29. But you see this right here, it's now down to 12.76. That's because of the share buybacks. So they bought back almost like 600, 700 million shares in buybacks.
It's about 3.5% of the float.
Yeah. So if you keep going like this, where you keep buying back the shares, and here's the other thing, because they have so much cash flow, they can actually increase the level of buybacks that they have, which is going to boost this right here, which is your earnings per share on an annualized basis. So if we go right here to their earnings, this is the calculation that I'm making in my head. Let me see can you see my calculator? Can you see the calculator on my screen?
No.
Or no? I have to share my calculator. Hold on 1 second. And this is just basic math. Okay. Window. There we go. Okay. Can you share that? Okay. So right now, Google is generating 1.55
a quarter.
Yeah, per quarter. You multiply that out by 4 on a forward basis. Let's just say they had flat, growth. So that ends up being about $6.2 dollars per share of earnings, right? Google typically trades at about a 25 multiple. So if you multiply that by 25, you get a price target of about 155 currently. Now, this doesn't take into account any growth of this number. It's just what it is right now. What I want to do, and this is what I typically do, is I'll try to project out what the earnings per share should be going forward, and then base my calculations based on that. So if we go to, let me just share this real quick. NASDAQ.
Basically, you're trying to understand what's an appropriate price to pay, knowing that it's going to grow by let's just say 10% or 20% within the next several years. And so you're
Yeah.
just trying to understand, if you're gonna, because let's just be honest, we really shouldn't even be looking at fiscal year 23 at this point. We should look at what the potential is for fiscal year 24, because that's what we're going into. And so some of
Yeah.
these companies are basically where we're at today, add another 10%. And it's exactly where you're kind of going for. It's like you could look at the
Mhm.
trailing 12 months, but you're only going to increase from there. And if you're able to keep that ops margin, like you saw that 3% ops margin, that additional 3.5% of the shares being bought back, and you're able to continue down that path. Um, is this one you're wanting to share, Chris, or you want to share a different one?
I'm trying to look for the one where they have the projections right here. Let me just share this. Da-da-da-da-da. Okay, here we go. So these are the current projections for Google's earnings into the future. So if you see here at the year end mark, they're supposed to generate 5.68 dollars per share of earnings, right? That's the consensus amount. If they beat on it, they beat on it. If they don't, they don't.
You might have to
December
zoom
it's
in a
going to
bit.
be, oh, sorry. Here we go. So these are the consensus earnings that are put out there. So right here in December of 2025, they're projecting between $7.44 dollars per share in earnings, and the high they're projecting is about $9, and so the consensus about $8 a share. So if you just do simple math, like with a calculator, you multiply out by a valuation that you think is fair. For me, I think the PE for this company should be at least 25. You just multiply 8 times 25, you got yourself a $200 stock.
Yep.
It's very simple to figure that out. The question is, are they going to meet that, or are they going to exceed it? In my opinion, I think they're going to exceed it. And if they
Yep.
do exceed it, that gives a lot of value going into the future. So
Another way
you
that
know,
people might look at this is they might take what the stock price is today, just like what Chris did, right? Chris is just kind of taking what a premium sort of company multiple would be, right? I mean, you think about the Apples and the Microsofts of the world; those are trading upwards of 30 price to earnings, right? So what Chris
mhm,
is kind of just saying is, and you can do the reverse, right? You could say, well, what is it trading at today versus a fiscal year 25 sort of earnings multiple? And you could say, well, it's trading at $1.30. And if in fiscal year 25 they make $8, what am I paying? And you're paying $16 for every dollar in earnings to share. That's cheap. That is
yeah,
cheap. And so if you think about it, and you're right, like Chris is saying, you know, that margin of safety then is saying, well, even if you think it's only going to get to to 20, right? Do your $8 times 20, you're still looking at, what is that, $160 a share? So it's still cheap comparatively to what you're looking at. To me, I think it easily should be trading between 22 and a half times and 25 times, just based off the premium nature of the business and the fact that how quickly it's growing. Um, so anyway, just some food for thought there, because there's so many different ways that people can do their discount values and their
mm,
kind of cash flows, I mean, and try to understand where they think that this thing's going to end up. But there's a lot of tailwinds, right? You're producing so much free cash. It's a very capital light business. They're going to be buying
yep,
$6 billion worth of shares back, which is going to be 3% of the float, 4% of the float. And with that, they're going to be increasing revenues at double digits. And if they're able to continue to squeeze the ops margin in a positive manner, I mean, you could see these sorts of movements, for quite some time. And it's not a matter of when will the free cash flow hit $100 billion, or sorry, it's not a matter of if it'll hit $100 billion a year for free cash flow. It's a matter of when. And to be honest, I wouldn't be surprised you see it in 2025, 2026.
yeah, yeah. I think the one thing I'll give a lot of credit to Microsoft with is, see, Google was sitting on this AI. They've been literally spending money to develop AI. They created a white paper. OpenAI takes it. They develop, ChatGPT, and Microsoft, being that it's run by Satya Nadella, the guy is probably one of the best capital allocators in the world, figures out, hey, I could just acquire this for 10 billion, integrate it into all my family suite of applications, and boom, I've got myself reasoning to grow my top line without spending any of the money at the bottom. And it's that acquisition of ChatGPT, I know a lot of people were critical about it, being like, "Oh, Microsoft overpaid." Clearly not, because you can see what Microsoft's growth looks like right now. You know, someone asked a good question. Why doesn't Google offer a dividend? Believe it or not, I wouldn't want Google to offer a dividend.
When you're
Instead of the
getting when you're
dividend,
getting
yeah,
ops margins at 28%, why would you offer a dividend? And then
yeah,
have to pay all that tax,
hmm,
associated with it, and it's just inefficient. I mean,
yeah.
like you probably were about to say. Well, I'll let you say it. You're probably going to mention the
Mhm.
buybacks as well.
Yeah, no, I was just gonna say, why not just buy back the shares, save everyone some time and headache? You know, I know a lot of people. They're like, oh, if they pay me dividends, I'll just buy more shares with it. Well, why pay the tax on that? Why not just let the company buy back its own shares? And so this way, you're getting the benefit anyway of getting a smaller pool of shares that are going to be generating that income. So I think Google is doing it right. Like Microsoft right now is paying about a good amount of its free cash flow to the dividends. Not a lot, but it is doing that. Whereas Google's just like, fuck it. We're just gonna dump all of our additional free cash flow into share buybacks.
So
Does
I want to
buybacks help?
address
Yeah. Yeah.
this one because I still think a lot of people will look at a share price, and hopefully helps out some people. I know this is going to be just nails on a chalkboard for some of you guys, but some of you might be sitting here and saying, "Well, Tesla is probably more valuable than Google because the share price of Tesla is over 200 and Google's 130." And in reality, you really just need to look at the market capitalization of the company. And so, in reality, in terms of how the company values Tesla versus Google, Tesla's a $700 billion business, and Google's a 1.7, $1.8 billion trillion-dollar business. Sorry. And so, all that really matters is the share count that the company, and the share count is just a way of splitting up a piece of pizza, right? You could have the same size pieces of pizza that you slice it up in 8 different ways, 10 different ways. It's still going to be the same amount of pizza, just the amount of slices of it is different. And so what Google is doing is they're buying back the shares of that are outstanding. And if they buy back 3.5% of the shares, even if they don't increase ops margin, even if they don't increase revenue, even if they don't increase their annual earnings, their EPS is automatically going to go up 3.5%, because EPS is earnings per share. So it's basically taking that flat earnings for the year and dividing it by how many shares are outstanding. Now, if you buy back 3.5% of the shares, you now have 3.5% less shares to divide by. So automatically EPS goes up. The reason why we saw such a large growth in Google EPS was it went from 105 to 155 year over year. One, revenue went up 11%. So there's that. Two, they bought back 4% of the shares outstanding. So there's that. The ops margin went up 3% as well. And so you think about, your revenue goes up such a large margin, and then you have basically your share count go down. It's just a catalyst to be way more than what you'd expect. You'd probably expect, oh, well, all that sounds really good. It should only be, 11 or 20% EPS growth. It's like, well, no, you have all these things compounding on each other. And next thing you know, you end up with something like a 40% EPS growth year over year. So hopefully that helps a little bit. I think sometimes we all get lost and we'll say, well, this share price is higher than this one, so this one must be more valuable than the other.
Yeah. Yeah. For me, my projections show Google by the end of 2025 should be worth, just based on its current valuation, between, I'd say, probably 200 and 250. 200 on the low end, 250 on the high end. Just cut it down the middle and boom. That's like my price target, the 225. Even during a recession, I think these guys just generate too much cash flow. They're cutting expenses where they can, and they're growing where they can. And yeah, so on a valuation perspective, I think they're doing good. They're growing their AI presence significantly. Like a lot of the stuff that spoke about today was just making sure that they're investing in the business right now to take advantage of all the products that they're coming out with AI. So like I said, that cloud, man, that's the only thing that really like didn't do well. Other than that, I thought they had a phenomenal quarter.
I'm
Yeah.
pretty upset, man, because I'm just doing some back of the envelope math. I bought Googl
Mhm.
knowing that eventually it'd be a $100,000 plus position, but now knowing how far my portfolio is taken, I've kind of like taken the ball off of buying a crap ton of Googl over the past probably 10 months to a year, because I was buying it when it was in the 80s and 90s really heavy, and I got my share
Mhm.
count up to like almost 400. And
Yeah.
since I've kind of like taken my foot off the gas, I'm sitting here being like, God damn it. Because had I just been a little bit more aggressive, got like 500 shares or 600 shares, it's like I could be very quickly sitting on a 6-figure position in Googl. And now I'm sitting here being like, well, even at the prices that you're talking about, it'll still be in the 80s, 90,000. But like, damn it. Like, I wish just with like a little bit, even at 200, right? If I had 500 shares instead of the 380 that I have, I just need the share price to go to 200. Next thing you know, I have $100,000 position in Googl. But
Yeah.
makes me a little frustrated that I spread my money around too much sometimes. But
It's all right,
um,
man.
yeah, yeah, Google's a good one, man. I think that this is one that I'm definitely going to hold on to for the long term. And it goes back to like something as simple as and inevitable as Googl. Sometimes people just take their eye off the ball. They look for something that is a home run, and sometimes they lose the forest through the trees, right? You can sometimes find a great stock like Googl and say, that's not going to be enough. And you'll look for something that's way more risky. That's, let's just say, 10 times as risky, but might only get you 3 times as much the return. It's like, to me, it's like, why take on 10 times much more risk and only be able to guarantee yourself 3 times more of return than if you were to take a tenth of the risk by investing in Googl and guarantee 1/3 the return, right? Like that, to me, it's like, and it's most likely going to outpace the S&P 500, all those sorts of things that you start to look at. It's just like, it's almost like an inevitable position. Like, why wouldn't you take that? Um,
Yeah.
but anyway, enough about Googl. I don't
Yeah.
know what other company you wanted to look at. I know for me, you're obviously looking for Verizon. I was looking at Nextera. They reported yesterday or today.
Mhm.
They did okay. Verizon, I know you're looking at, and then we could look into Microsoft. Microsoft, I was just absolutely blown away, and I just
Yeah.
don't understand how that company is continuing to grow at the pace. And you already touched on it earlier in the stream, but I think they were at like a 28% cloud growth revenue, and
Mhm.
their run rate for the year is going to be over $100 billion for their
Yeah.
cloud business. Am I
Yeah.
miscalculating that? Did I misread that? I think it was like they're on like $28 billion or something like that, or maybe it was $30 billion for their cloud revenue for the quarter, and they're growing. So they might be on pace either to break it this year for 100 billion in cloud revenue. They're definitely going to break it next year, even if they just don't even grow whatsoever.
Let's take a
Um,
look. Let's take a look at this. So
I love
this
these
is,
graphs.
yeah, me too. So this is, even though this says Q1, this is fiscal year, right? So every company has a fiscal year. So whenever you see something like Q1 of FY24, every company has a different fiscal year. So not everyone's Q3 is actually the third quarter of the year. So I know that because sometimes people will see this and they'll get confused. So let me just break it down. So Microsoft fiscal Q1, they generated $18.6 billion from Microsoft 365. So, like Microsoft Office and everything else. So, right there, they grew 13% year over year of just Office subscriptions. So, Microsoft Office, Excel, PowerPoint, what is it called? Teams, all that stuff is here, right? Then you have Azure. This is another thing. Look at the operating margin on their Office product, 54%. Their cloud operating margin is fucking 48%. And that shit grew almost 19, 20% year over year. And then you have your personal computing, which is your Xbox and your Windows, right? And even that has a 31% operating margin. This is just a fucking beast, man. Microsoft is just a beast. I don't know. Look at this, man. 71% gross margins. And of
It's
that, their
insanity.
operating profit is 48% fucking margins, dude. Net profit is 40%. It's Microsoft, baby. I don't know.
My hope is though, like, you think about this. So the net income, or sorry, the operating income, operating profit for Google was about $22 billion.
Mhm.
So not that far behind from
Yeah.
a Microsoft. Microsoft is obviously a much older company.
Yeah.
The business for cloud is still in its infancy. I think that you will see Google Cloud continue to do well. There's another caveat I want to ask you about this as well. I still don't understand why there's a price discrepancy between, in terms of multiple, between what we see for Microsoft and what we see for Google. Microsoft, I think, is trading at a close to a 30 times multiple
Yeah.
comparatively to the low 20s that we're seeing for Google. And then the other thing I want to ask you and get your input on is, I recognize that Google Office Suite is a very big moneymaker for Microsoft, but do you think that they could, if they went the route that, say, Google does, and they offer free products for an Office Suite, do you think that they would steal people away from Google and eventually it would increase and flow through their
Wait, say that again. Say that
their
again.
products? So right now, the way that Google Cloud makes products or makes money is you set up a Google Drive, you have Google Docs, you have Google Sheets, you have Google Slides, you have all
But
these things that,
that's for workspaces, right? That's what
yes,
you're
but
talking
that all
about.
goes
Yes.
back to Google Drives, which is Google Cloud,
Cloud. Right.
right? So that gives people, and it's like, well, you run out of space, you have to buy more space. So, but my thought process is a lot of people, because they don't want to pay for the Office 365, will go to Google. And that's what's
Mhm.
partially driving some of the cloud revenue for Google. They're not charging, and maybe they do for corporate, but I know for personal, you don't get charged to use the Google suite of products. Versus if you go to Microsoft, like, yeah, they might be installed on your Windows PC, but you have to buy the Office 365 subscription to be able to use it. And my thought process is like, if you give it away for free, would you eventually be able to cannibalize what Google Cloud is kind of getting from, say, these maybe auxiliary people that are using the Google Docs and the Google suite of products, and they'll be more inclined to use Microsoft? Because I think the Microsoft products, let's be fair, are more superior than, say,
Mhm.
than Google Docs, but Google Docs is free. So on my personal side, I always use Google Docs and Google suite of products because it's
Yeah.
free. Versus at the office, obviously we pay for Office 365. But
Yeah.
Microsoft's kind of double dipping, right? They're getting the subscription revenue from Office 365, and they're getting the Azure cloud
Mhm.
revenue as well. So my thought process is, would they be better to be doing a similar model to Google, or does it not matter because they're just making a shit ton of money anyway, and who cares?
I mean, this is like the war between the two that comes around. Like, okay, so Google right now has Google Chrome, right? Google Chrome is most popular browser on the planet.
80% market share, whatever,
Yeah.
something like that.
Now Microsoft said, yeah, you know what? We'll just create our own version using Google's source code and call it Edge. And now, like they're utilizing that and they're putting the default search on the Edge browser to Microsoft, like Bing. So if you search, you can of course change it to Google. That's why like Satya Nadella was complaining. He's like, the most searched thing on Bing is Google. I don't know if you know that. So,
Yeah,
I so
and it has
you
been for
know,
a while.
yeah, so it's just the funniest funniest thing because Google really does well in search. Microsoft just is really hard for them to penetrate that market. And it's kind of the same thing with Google. Like Google right now could try to charge for workspace stuff, but a lot of companies are just like, no, we're good with Microsoft. We've had all this like literally decades upon decades of experience. They've got a user base that's in the billions. So like right now, I'm an Excel jockey. Like I could do so much on Excel. And I find Sheets like doesn't have everything I need, whereas Excel does everything. So when it comes down to it, the ecosystem, even though it overlaps a little bit here and there, each one of them is entrenched into their section pretty in depth. So the question is, how do you get more people to switch over to your thing? And like Bing tries. I don't know if you know this, but Bing. Let me just show you this guy. This is actually kind of interesting. I don't know if a lot of people even know this, but if you go to Bing, right? Bing rewards, Microsoft will actually pay you to use Bing.
I forgot about
Did you
this.
know that?
Yeah, I
So
forgot. It's like a
the
year or two ago they started this, right?
yeah, so basically what happens is every time you use Bing to search, what ends up happening is you end up getting points added to your account. So like let me just sign into my hold on one second. Let me just stop sharing for 2 seconds so I can log in. It's
Purple
funny because my log
elephants to the password.
it's funny because my login for my Microsoft account is my Google. Google.
Google.com, yeah. Gmail or whatever. But yeah, I
Yeah.
think it's pretty astonishing. Just let me know when you want me to share again. Is that good?
Yeah. Okay. So here we go. Let me share. Okay. There we go. So here you guys can see these are all the different things that you can actually use your points. So like I have 22,600 points and I can redeem this. And the stuff that you can redeem is, let me just pull it up in here in this window. So these are all the redemptions that I can make. So if I wanted to, I could get a Roblox digital card that, lets me buy in-game stuff. If I really wanted to, they have an Amazon one where, if you search, you can get an Amazon gift card. Like, so you need 6,500 points. And the thing is, like, it's not hard to accumulate Bing points to get these rewards, you know. So it's very interesting. Like, I almost have enough to get Domino's, maybe burger. If my wife knew about this, she'd be using Bing all the
Yeah,
time because
for the bucks.
she loves Starbucks. So, you can get let's see how much so 32,000 points will get you a
Oh, damn.
Starbucks card, a $25 Starbucks card.
It's a lot.
That's what I'm saying. That like Microsoft really is trying hard to get people to use this.
It's almost like it's pretty funny because I want to bring this back to LinkedIn a little bit, but it's almost like how hard Google was trying to make Google Plus or Google. Remember they were trying to make the social media website back in the day, like probably 5 to 10 years ago, where it was called Google Plus or something like that. And everyone was trying to make a profile kind of like what Facebook had. And people were just like, why would I do this? I started to try to expand on it. And I think around the same time I was starting to try to get my YouTube going. I was like, maybe there's some communities I can reach into and grow my YouTube profile back then. But yeah, it didn't end up working. But I would say, and then I'll kick it back to you, the LinkedIn purchase has gone way more grown way more profitable than I would have ever imagined it to, because it was like a 50 odd billion dollar purchase, wasn't it? It was a lot. And I was sitting there initially very skeptical. I was like, well, Microsoft has way more money than I think that they know what to do with, so they're buying and overpaying for this. But I think that LinkedIn has grown to be way more of an asset than I ever would have really thought. I find myself on there to find about business articles. I won't say as much as I go on to Twitter, but I would say there's a lot less trolling on LinkedIn than there is on Twitter, because you have a face to the name and you have a picture, and people are trying to make like legitimate, versus some people on Twitter.
But there's a lot of fake congratulations on there too, man.
There is.
It's like, oh my God, like this person, congratulations on your new position. I was like, bro, you hated her. Shut the fuck up. Like you were like, when you heard that person, left, you were the first person to be like, yo, that bitch is gone, and all of a sudden you write on her LinkedIn, like post like, oh my God, I'm so sad that you're leaving, blah, 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 blah. It's like, yeah, because you one day may end up running into this person again and you need a job or a recommendation or something. So I think like the rawness does not come out on LinkedIn. Like everyone is cordial, everyone is like professional, but the truth is we all hate each other on there too, except we're not hiding behind an anonymous profile. So people are a lot nicer.
People are a lot nicer. I doubled the estimate. I'm too used to these. We keep talking about Hess and Pioneer acquisitions at work because obviously I work in oil and gas, so I probably had those numbers in the brain. So the 50 billion was double the estimate, but I'm still very surprised. I do want to hop into a question for you. We can either talk about Verizon, but I do want to get your thoughts about where Meta and Amazon will be this week. Meta reports tomorrow, Wednesday the 25th. Amazon reports on Thursday. At this point, we'll have 5 out of the 7 of the Magnificent Seven kind of reporting, with Apple being in November 2nd, which I think is next Thursday, and then NVIDIA being on the 15th or 16th of November. So quite a few weeks down the road. I want to get your thoughts about where you think Meta is, and do you think that they're going to be able to continue the success they've had over the last few quarters at gathering some love? Because I know you obviously have been a big proponent in investing in them. I think you might be fully sold out now, but correct me if I'm wrong there. And I'm curious, do you have Amazon as well? I'm trying to remember.
I have Amazon. I don't have a lot of Meta. I have like a few, like I still have maybe like I have a few shares left in my retirement account for Meta. But believe it or not, I may end up buying some because I think Meta is just doing crazy in terms of like their monetization on Instagram Reels.
Yep.
It's like I'm getting ads on there that are so focused and highly relevant to like things that I'm doing day to day that like I know that they're getting monetized. So, and at the same time, they're not paying creators. So that's all that stuff is just revenue that's coming into their ecosystem. So if you just look at Meta's cash flows, they're on another level too, man. And they've done a lot of share buybacks. So
they should be in the
that,
trillions. I don't know if they are. Did they get back to the $1 trillion mark, or are they still trying to remember?
They're not in the $1 trillion mark yet, but this is the true potential for Meta. Let me just show you guys real quick. So this right here is Meta's operating income. So in September of 2021, which is their highest point, they were generating almost $50 billion in operating income. And of course, that number came down significantly after all the hiring post-COVID. And so right now they're eking this operating income back again. So the goal is to make sure that they're getting back to growth mode. And so you can see here, they've actually had 3 quarters of nothing but giant leaps in operating income. And I don't think that this next quarter is going to be any different. So they might end up hitting about 10 to $12 billion in operating income this coming quarter. And if they do that, it's going to go up.
Yep.
The only thing is their valuation is just a little bit high
Stretched
on the higher end. Yeah.
I mean, in 2021, I think that they're trading in the 380s, right? Hold on, let me just pull it up.
380s.
Yeah, 370s here. I guess it did get all the way up to close to 380. So I think that they did touch the $1 trillion mark back then. It's been a tough struggle for them. They obviously went down to $100 a share. Everybody thought that they were down and out. I think they were spending $20 billion a year, if not more, in the metaverse, and everyone thought, what the hell are you guys doing? I thought it was a very bold move going from Facebook to Meta, and I actually applauded it. I knew it would take several years to play out. I didn't end up getting in like you, Vitali. I wanted to. I would think I was just too much buying Google and Amazon, things that I were a little bit more in love with and thought they were a little bit more guaranteed, but a little bit riskier of a play definitely would have been Meta. And I think it definitely played out for the best for a lot of people. I just think that it's now a little overstretched. I think it needs to grow into this valuation a little bit here. But I think if you're looking 5-10 years down the road, it's like you should have it, right? Like if you were to choose and you don't have anything, and you want a stock, I think that this is something that can honestly be at the forefront. And I think if you're talking about meta companies, like metaverse specifically, you have to be thinking about Microsoft. You have to be thinking about Meta. Like I think that those are probably your two first. On the enterprise side, it's going to be Microsoft, but in the overall gaming side, I think that Meta is obviously going to be a huge player in that. And I think that they will spend so much money, which I think they have the luxury of right now because they're in such a a low capital sort of business that they can throw money at the metaverse and be years ahead. And even if they only
Yeah.
get 5-10% returns, eventually they're going to spend so much money that they're going to end up having billions upon billions of revenue kind of coming in for them. But what do you think? What do you think about Amazon? Unless there's another thing you wanted to talk about with respect to Meta.
Well, just one thing really quickly with regards to Meta. So their PE had really dropped off to like historical lows in March and December of 2022. But you can see here they changed they really changed around the business. And so they've gotten back to the point where they're generating, like their PE ratio looks really high right now because it's just, it's like around 36 right now, 36.39% PE. That's just pretty high. Even historically speaking, you're paying a huge premium. But the reason why is because you see all this EPS that they had before, they invested a lot of that money into the metaverse and everything else. So imagine if Meta gets back to their PE high, I mean their earnings high that they had during, post COVID was around $14 a share. Dude, that's something to behold, if they get back to that. Because at that point, what is the valuation going to be? I mean, at
Even if you
current,
do 25x, like let's just say you should keep it the same as
yeah,
Google at
yeah,
$14, you're looking at $350 a share.
yeah, yeah. That's
But
50
right
at
now
350.
it's like almost 60 to 80% more than that, right? So it's
Yeah,
tough. But give it a 14 times a 30, right? That gets you
yeah.
closer to 280 a share. I mean, it ends up right. Am I close? Hold on. No, it's way more than that. Hold on. 14 times
It's
30,
350. It's
420.
350. Well, 30,
Yeah.
if at a 30 multiple, it's more, but at
Yeah.
25, which is the conservative one,
I
it's
think
like
it's,
350.
yeah, but you're not, I think you're a little bit away from that,
Yeah.
personally, I think, but I'm curious where Amazon's going to be. I think the thing that I'm still waiting on for Amazon, which I think is really what's going to blow everybody's socks off, and the price is just going to absolutely moon, and I'm talking 20 to 30% in the matter of a week, is when Microsoft gets serious about 1 to 2% e-commerce margins, because right
Mhm.
now they don't care about losing money. The US e-commerce business makes money. The European one, I think, is still underwater because I think they're still trying to gain market share in the European markets. When they decide to truly actually get to a place where they get 1 to 2% earnings margin, you could start to understand where this company is going to truly start blowing everybody's socks off, because these guys are going to be making over $100 billion in cloud revenue at probably close to a 30 to 40% operating margin, in profit margin. So that's where the majority of their money is coming from. Once they start to say, we want to own a 3% net income percentage on $1 trillion, $1.5 trillion worth of e-commerce, you're starting to talk about even 1% on what they sell today is $5 billion. So
Yeah.
they decide to stop going from a losing business to, hey, we're actually going to turn on the tap, then it's going to get pretty crazy pretty quick. And I think that there's a lot of synergies associated with these Rivian vehicles, with lower cost to operate, lower fuel. They're going to start doing the renewables investments, where I think that they're going to start seeing synergies in 10 years time of in the order of 40 to 50 billion dollars worth of opex being removed from the system, and that's going to go directly to the bottom line. And once
Yeah.
that happens, you start thinking it's not too far off from where a lot of these other companies that we've been talking about today, Google, Microsoft, where their net income is going to be getting close to $100 billion a year. And I don't think that it's going to happen, 10 years down the road. I think it's going to happen way quicker than we really think. I think it's probably going to happen within the next 4 to 5 years, where this thing is really getting to a place where it's climbing towards $100 billion in net income a year.
Yeah. I mean, this is the thing with Amazon. So this is the last quarter's revs. you can see here that they are double digit growing on a lot of things, but the one that's always interests me is right here, which is their advertising business and their AWS, right? Those are the two main things that really generate a ton of income for them. But then there's also third party services which generate a lot of operating cash flow. So you can see here that their gross margins are about 48%, but their operating is probably the worst part because they just have so many operating expenses. So right now, like fulfillment is about 16, technology is about 16. So they really have to cut back on some of their operating expenses. And I think they are. So you see this right here that the fulfillment side, they're going to be cutting back on fulfillment spending. And they're also going to be cutting back on some of their technology things because they invested a lot in growing their warehouse footprint and everything during COVID. And that's the reason why we're seeing that additional operating income showed up last quarter. And I think this quarter is actually going to be even bigger. Let me just bring up Amazon's filing real quick because that actually highlighted it the best. One second.
The 10Q for 2Q.
Yeah.
I think it's definitely the one that I think a lot of people keep forgetting about because like it's not technology, it's e-commerce. It's like, yeah, it's in this weird space. I think a lot of people don't realize that the moat that they've built and how much they're still trying to infiltrate across a multitude of different markets. Like I see myself even, there's a very long time ago, 5-10 years ago, where I was like, why are people ordering groceries off the internet? And now I see myself doing just that because they make it so easy to do. And it's getting to a point where I think more and more people are getting to this convenience lifestyle. One, I think because for the people that do work, I think that they're requiring more and more hours, I think, out of some people. And then two, I think that just the cost of it is relatively cheap and it's helping employing other people too. So I think it's a good opportunity for people to continue to look into Amazon if they haven't. And these guys are going to report on Thursday.
Yeah. So Amazon right now, this is their net sales, right? On a TTM basis, on a 12-month trailing basis. You can see here they're just growing all the time. Like there's just more and more people order stuff on Amazon. People have Prime membership. They have their own fulfillment networks and everything. But this is the one thing that happened last quarter that not a lot of people were expecting. Look at that jump in operating income, right? This is going to keep growing, in my opinion, and it's going to grow really, really fast. And when that happens, the valuation of Amazon is going to really just flip, to the a lot more upside than what it is right now. So if you see right here on an operating income basis on just North America, they generated more income. International, but where was that one slide that really highlighted? So right here, their operating cash flow is just gigantic. But this is the thing that they've been doing right here. They've been spending a lot of money on warehouses and everything else, but this is going to slow down and actually go down significantly, which means that all this operating income is going to go straight to the bottom line. So this $7 billion is actually going to turn into a much, much higher amount. Damn it, where is that one last? Damn it, there was this one section in, I think they're either their earnings or their 10Q, which did a great job of where the income was coming from, because that really highlighted. Damn it. Whatever, I'll look for it.
But it might be the 10Q. I remember looking at the 10Q and it had a pretty good breakdown of all those things. I think we're there with you. There are $60 odd billion of cash flow from operations. 50 odd billion is going towards.
I found it.
Towards the capital expenditures in the last 12 months. It's like this thing's heading towards the $100 billion mark in terms of operating cash flow.
So if you look at this is what Amazon does on operating income wise. So if you look at 2022, they lost money in Amazon, like just regular sales. So that's $74 billion in sales. They lost $627 million. So not really that great. This year, they actually generated a positive operating cash flow. So about 3.2 billion. Okay. Internationally, they're still losing money, which means, not the greatest, but they're starting to lose less money. Eventually, this is going to turn into a profit also. AWS, which has been their moneymaker, that's still making them crap ton of money. Yes, it's down a little bit, but it's still making them a lot of money. They had a lot of operating expenses come up for AWS, primarily because they spent a lot of money in buying up warehouses and stuff for AI. Then you look at consolidated. It's once again right here on a net income basis. They just had the wildest swing from negative 6 billion to positive almost $10 billion. And this is the thing that's going to keep going, and it's going to keep going for Amazon. And I think a lot of people are really not understanding how Amazon really works. Amazon's biggest thing is, back in the day, and I got confused by this too. I was like, oh, Amazon's got such a high PE. Like, I don't want to invest in it. But the truth is, Amazon just takes all the money they get, operating cash flow, and they build more shit with it. They build more stuff. They sell more stuff. And that's where the business actually goes. Like, all that money is your shareholder money that's getting reinvested back into the business. That's why they're doing so much in revenue,
And I think I didn't really realize it until they started the cloud business, because originally they were getting this cash flow and they're running at such a deficit where I was just like, I just don't understand this PE. I don't understand why anybody would invest in it. I remember looking one quarter and the PE was 1,000. And I was just like, because they always play that line between profitable and not profitable on a net income basis. And so one quarter was very, very marginally profitable. I'm like, why would anyone buy this damn thing? And it wasn't really until I started understanding the moat that Bezos was trying to build and what the cloud business was doing, where I really was just like, this thing, when they finally decide enough is enough and we have enough of a moat, where all the cash is really going to start coming from. And that's when I decided to be like, I'm an idiot. I don't know why I haven't been investing in this company forever. It finally clicked. It was like, this is going to sound such a dick thing. It's like, I remember in college, the first time I took calculus, or like at the end of high school, I started learning pre-calculus, and when I got to college, I started learning calculus. I just didn't fucking get it. Like, I'm pretty good at regular math, but it's very similar, where you kind of have to look at things, and even though it might be considered math, you have to look at something completely different. And once you get it, you get it. It was very similar to me when I was doing dividend stock investing. It was like, why would you ever invest in Amazon? Why would you ever invest in Google? They're paying too high of a price to earnings ratio, blah, 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 blah. I want these single digit to 15x price to earnings multiples that are paying out all their cash flows and whatever. And it wasn't until I finally understood and it clicked for me, where I was like, oh, it doesn't always have to be about dividends. It could also be about long-term potential growth. And because I just always viewed things as, well, if it's growth, it's going to be speculative and it's going to go to zero, right? Versus dividends, you can guarantee that at least you're getting a little bit of a drip every quarter or every month, however you invest it. But I realized it's like, that was such a rudimentary way of thinking about the market. And it wasn't until I really caught on and got a little bit more experience, where I was like, well, there are companies like that'll overpay the dividend. And there's also companies that are very extremely speculative growth, but there's also companies that are extremely profitable, but they're just growing so fast that they give them such a large multiple. And that's why the multiple is huge, because they know it's going to grow at such a substantial rate. Anyway, just some thought processes, but it eventually got me to the point where I bought Amazon, and I'm excited for what it's going to be, because I know in 10 years time, they're going to be in the $1 trillion worth of revenue. And they're almost halfway there. I think they're going to close in on 600 billion this year alone. So,
yeah. Oh man, it's going to be interesting to see the next couple of weeks worth of stuff that's happening. We'll see.
Yeah, and I looked at your Patreon. Don't feel obligated. For those of you guys that are listening, the 52 of you still listening, one, if you're not yet, please look at Chris's Patreon. The link is in the description. Chris is the man. His due diligence is unmatched, unrivaled compared to anybody else that I see in the community. And then 2, if you're thinking about becoming a member of this channel, I would much appreciate it. We're going to be doing a lot with all the income that we get from this channel. So like I said earlier in the stream, be on the watch for that. I think it'll be really fun to get everybody involved when we finally reveal that piece of the project. But while we're ending this and winding down, did you sell your Verizon spreads, or is that something you're to reserve strictly for your Patreons?
No, I'm not selling them anytime soon. I think there's, with the rates likely to be cut next year, this thing's got a lot more juice to squeeze. So I'm not selling them. I'm waiting for these things to really like do some damage. Like I'm up a good amount. I know that people who bought them at the time that I did, they did really well. I think some of these people are probably up like 50-60% on their position.
I know I regret it because I looked at some of them and it would have been the ones that I was looking at probably were like a 1 to 6 or a 6 to 1 or 7 to 1 sort of. Anyway, so it would have been interesting to see where they ended up, because I think the SoFi ones I did were like 4.5 to 1 sort of leverage. Anyway.
Yeah. No, I'll show you what I'll just show the subscribers like one position that I have with it. It ended up doing close to that's 60% today. So I'm up 60% on that position. There you go. I love spreads, dude, especially with companies that are so undervalued. It just makes so much sense, especially with like a binary outcome like this. And the options were just trading so cheap. Like especially the closer near term ones, they jumped like crazy. So I know some people are actually on my page, like from my Patreon or in the chat right now. They did well. One of the biggest, the funny thing is their biggest regret is I didn't buy more. And that's always the case, It
is. My question, have you ever done a poor man covered call or no?
Like what do you mean?
So, for example, instead of the Verizon short call that you sold that matches the expiration date, so let's just say you bought the 35 long call for January 2026, and you paid whatever it was, $4. I don't remember what it was. But instead of selling the same January 2026 at the 45 or the 50, you would have went to January 2025 and as if like you own the shares, right? So generally speaking, people buy these a little bit more deep in the money. They don't necessarily buy it out of the money. But so instead of buying the 35, they might have bought the Verizon 25. And they would have bought, instead of because let's just say you're long, right? Let's just say they wanted to buy $10,000 worth. Well, instead of buying $10,000 worth of shares, they buy $10,000 worth of deep in the money, $25 leap calls on Verizon. And instead of now, technically, if you do this in a Roth, I don't think they'll let you do it. But if you do it in a margin account,
there's one problem. The problem with a poor man's covered call is that, when it comes down to it, the total amount of return that you get, you have to keep doing it over and over and over to get the same kinds of returns that if you just like hit it right with one vertical spread that you would end up getting, right? The problem with the thing with covered calls is that, number one, you also have a lot more taxes that you have to pay, because remember, every time you do it, you sell a poor man's covered call and you roll it, you're basically doing a transaction, which means that you have to pay taxes on those as short-term gains. With a spread position, you could just hold it for a year and it's fine as long as you buy leaps on it. So that's one of the benefits. The other thing is I'm terrible at timing the market when it comes to like options in the short term. Long term, I'm pretty good. Like I can craft a really good strategy to maximize return potential, but in the short term, I don't think I've ever like I've had like successes, but never like enough to like say like, oh my God, yay. What always ends up happening to me is that I'll be like, man, I should just sell some covered calls on this one position, and I'll sell the covered call, and boom, next day that shit jumps like 20%. And I'm like, God damn it, now I have to roll this position, and and a lot of times I'll roll it, and then all of a sudden Now the shit crashes, and I'm like,
Yeah.
God damn it. So I'd rather just do long term, and that's it.
I hear you. I mean, I'm with you too, to an extent. I mean, sometimes you just have to buy the price when you see the price and not worry about the short term pieces of it. But I got into that trap as well, where I was trying to write too close to the money and that's part of the problem with covered calls. That's part of the problem with selling puts too. It's like, well, if I do it at a whatever delta, I'll get 4 times as much money. It's like, well, you're getting 4 times as much money because it's fucking riskier, right? Like it's more likely to happen, and that's why they're paying you that sort of premium. And so it's like you almost have to find the sweet spot that works for you. And for me, like those covered call things, like I don't I've been very cautious about writing around earnings. And then two, I write, and some people make fun of me. Like I know TJ, he won't make fun of me for it. He just recognizes that I'm just way conservative. It's like I'll be writing at the 5 delta, meaning almost 2 standard deviations out where the price has been historically over the past, let's say, month or 2 months in terms of how much it swings in a given amount of time. And he's over there selling it at the 30. So he's like 1 standard deviation away. So very often will it hit 68% of the time. His things will kind of be in the money versus mine. Maybe it's 30% of the time his will be in the money versus mine. It'll only be in the money, 5% of the time. It's a completely different sort of mentality, but he's making way more money. But I don't want to get rid of my golden geese. I want to make sure that I hold my Googl shares forever. I want to make sure I hold my SPY shares forever. But it just makes you think, like, there's so many different ways of attacking this. If this is something you truly think you're going to hold until 2026.
Hey, dude, I hate to interrupt. Dude, I got to take a massive shit. I've been
Dude, you're good.
For like
you're
the last
good.
5 minutes. I was like, I didn't want to be like impolite and just bounce, but I got to go later.
You're good. I'll talk to you guys later. All right, everybody. Thank you once again for chiming in to the Cashflow Chronicles. Like I said, Chris and I are planning on something. It'll be cool. I'm really excited to talk about this one. I don't know when. I know Chris and I are going to have a couple chats when we're in Vegas, starting, I guess, on Thursday. I get to meet Chris for the first time. So we'll be getting dinner for with me, Msft, and somebody else. Who I don't know if they want to be public or not on the channel side. Just keep them under wraps. But it'll be the 4 of us getting dinner on Thursday. Then on Friday, we're meeting up with a group of like 15 to 20 folks in Vegas. It'll be a great time. Saturday, I think a lot of people are going to do Top Golf. I'm still not 100% sure if I'm going to be out there, if I'm going to be at the craps table, trying to not hemorrhage cash. But it will be a blast to be able to be there. And on Sunday, I know we're going to see Absinthe with a group of us, and so it'll be cool. I'll be able to meet TJ. I'll be able to meet Msft. I'll be able to meet Chris. Carlos is going to be there. Vitaly, unfortunately, cannot be there. And so I might chime in on Thursday, maybe for a quick, it won't be a formal Cashflow Chronicles, but around the time that I'm landing, it'll be about, let me think, I land 5:45-ish p.m. on Thursday. It'll be about 7:45-ish p.m. Central Time, which I normally go live at 9 p.m. Central, 10 p.m. Eastern. And so it might be a little bit later, but I'll be happy to, if we're able to, do like a 5-10 minute check-in or something, if I remember, right? I might be so fired up to be meeting Amit, Chris, and several other people on Thursday that I might completely forget. But I would love to kind of just do a quick round table and see how everyone's doing. It's not going to be formal. It's not going to be fancy. It'll be a point and shoot with an iPhone, but it'll be really cool to have everybody in one spot. I know Chris and Amit have met many times. Carlos and Amit, I don't think that they've met ever in person, but I know Vitaly and Amit meet pretty frequently up in the Northeast. And so it'll be an awesome blast to see a lot of the folks that we've been interacting with for the last year or so, specifically since I started getting involved with that group for Palantir Weekly. So it'll be really cool to continue down that sort of path and meet a lot of cool people. And I'm really just excited to be able to help anybody that I can. If anybody wants to chat while we're there, get some coffee, hang out, and talk about God knows what. I'd love to do that. My perspective isn't necessarily the right way to do things, but it's a perspective that you can at least lean on. And, because we're not all in the same shoes, right? You never know anybody until you're in their shoes and know their perspective, and they can only invest what's right for them. But my fear is that most people, unfortunately, invest in a way that they see some other people invest. And let's take, for example, somebody that's investing in spreads and stuff of the like. You might not necessarily have that experience to be able to call those things out, nor will you necessarily know when's the appropriate time to sell. And so if you're sitting there, I've had so many people ask me what I'm buying, and there'll be swing trades where I buy Caterpillar and I swing it for 6 months to a year, or maybe a year and a half. And once it got to a price I thought was too much, after the Inflation Reduction Act or after the infrastructure bills, it was trading in the $220, $230 range, and I sell it. People are like, do you still have Caterpillar? I'm like, no, man, I cut that loose. You got that money. Sometimes it doesn't make sense to hold on to something, right? Like, as much as I would love to hold Johnson & Johnson forever, I think that money is better spent being put in the S&P 500. And knowing that that's going to guarantee double over the next 7 to 10 years versus a Johnson & Johnson, which I think will do well, but will it be able to outpace the S&P 500? I don't necessarily know, especially with how much the earnings and the price multiple for J&J has been inflated over the past few years. So it's all about just understanding where companies are in their life cycle, where the business cycle is, and trying to not necessarily time the market, but catch the ebbs and flows as they come to you. I mean, you're not trying to time any market, but when the market gives you an opportunity, you still have to take it, right? So, anyway, I do think that, yeah, like Mike said here, I think if you have an opportunity to look at companies and it presents an opportunity like Googl here, is it a screaming buy? No, but when will it be back at 80, $90 a share? Maybe never, and you might have to buy it, unfortunately, at the 120, $130 a share range to be able to get where you want it to be. But with respect to Googl, man, I think it's a great price right now for those people that haven't really gotten involved. And I think that once you see the collar be loosened a little bit, kind of like Chris was talking about for Verizon, I think when you see the collar loosened a little bit from interest rate perspective, as we've seen to be forecasted in the second half of 2024, I think you'll see a lot of earnings growth going into 2025 for some of these companies. So I think a lot of times right now, companies are playing it a little bit safer, just based off the fact that they might have to be shouldering up cash to be able to prepare for refinancing or anything that might be coming in 2024, 2025, because, hey, they might get downgraded. And once you get downgraded, your stock price is going to be hit pretty big, because that means obviously you're going to have to add a couple percentage points to whatever debt you kind of take on. So it'll be interesting to see where some of these companies lie. But quick question on this one, and I'll probably end it up here. Be sure to become a member of the stream. Chris and I have a lot of cool things in store for you guys, for the Patreons as well as the members. How much of your investment is income/dividend investment? I don't have a percentage anymore, and in fact, I sold a lot of J&J. I don't know if you would consider SPY dividends, but I consider it dividends. I mean, it's a 1.6% dividend yield. Personally, I look at that as something that is a great dividend growth ETF, even though you might not think of it that way. It's a 1.6% yield, and it holds pretty consistently, and it's growing at a pretty expansive rate. So with that being said, it's probably got like a 7 to 10% dividend annual growth rate, just within itself. So, of course, it has its periods where it might have a decline, like the pandemic, but most of the time within 18 months or so, it's back to where it was before. So anyway, with that, I don't know. I mean, I'd have to give a good thought about it. But it's definitely less than it used to be. But I still have a pretty penny in things like Devo, Jeppy, Spy, Pepsi, Shell, UDOC. I mean, I have lots of money in those companies, and you know, a lot of my positions have been consolidated to be, I don't want to say $50,000 to $100,000, but there's a lot of positions now that are in the $30,000 to $70,000 range. I mean, my SPY alone is close to 250. My Devo is up there. It's like 1,000 shares of Devo, so it's like 30, 40 grand, maybe more. Jeppy, I used to have like 40 grand of that, which I sold and put into SPY, but I still have a couple hundred shares in my Roth. So I mean, it's hard because I've stopped focusing on things like Devo and Jeppy to remember how much money's in those things. But it's still a lot of money. But my income for sure has gone down. I was averaging I was supposed to kind of average 25 to 26 for the year. And I probably will average closer to 20 for the year. Next year, it's probably closer to 15, just based off of more so investing things into the SPY. So like J and J, I probably lost 40% of the annual income from that. So yeah, but there's still things like UDOC, Shell, Nextera. Like Nextera, I think I sold some of my J and J for Nextera. Maybe it was a different company, but that was like a 1-for-1 almost. I might have lost like, not in terms of total percentages, but just like from the dividend growth. I think I went from like, I don't know, like $1,000 to like $940 or $960, something like that, when I went to Nextera from J and J. So that'll be kind of cool to see that grow, because I think that one's going to be something that continues to grow at a pretty expansive rate as well. That'll be something that holds well with inflation. That'll hold well with the S&P 500. But one of these days, when Chris doesn't make it, I should do a dividend specific focused one. And I've thought about, if I get enough members on the channel, and I'll do it for free right now, but if I get enough members on the channel, eventually maybe I would hold that like kind of closer to my chest about what exact positions I have, in my top 10 and stuff like that, and actually give cost bases and stuff of the like, because I stopped that for a while. I mean, once I kind of hit the 7-figure mark, I was just like, it's silly to be like trying to clout chase. And to me, it was more about the message that I was putting out there, rather than, hey, look at me, I'm a 31, 32-year-old millionaire with, this much dividend income. And I realized as well, like once I was getting closer, what was it? It was 2021 or 2020, where I was on pace for like $28,000 or $30,000 in dividends. And I was like, this doesn't make any sense. Like, why am I doing this? I'm still so far away from like, we're quote unquote retiring. It's like, it doesn't make sense for me to be paying all this money in taxes. It doesn't make sense for me to just do this because I want YouTube clicks. It might be good for clicks, but it might not necessarily be good for the portfolio. And so to me, it meant more to my integrity and to my morals and values to be doing something that was true for myself, rather than specifically trying to clout chase for like dividends. And that wasn't why I was investing so heavy into dividends before. I think that's just how the portfolio was at the time. And I recognized like a lot of people were coming to the channel just because I had a clicky thumbnail with, I made, X amount in dividends this month, $2,000, $3,000 in dividends this month. And it was like, it was cool, but I didn't want people to show up for that. I want them to show up because of the well-roundedness of the portfolio. Because like, if I really wanted to get back to that point, I mean, I could get it to the point where I'm making $8,000, $9,000 in dividends a month, but is that the true thing that I actually want in the portfolio? And, it's just going to increase the amount of taxes I'm going to have to pay at the end of the year, and the portfolio is not going to grow. And so, would it be able to replace my income today? No, but it'll be close. And that's the thing, is it's like, would it be able to grow me? And I don't think you'd be able to grow the portfolio. The thing that it would allow it to do is for me to start another business. But I think the businesses that I want to start require capital. So anyway, let me see if there's any other quick thoughts. And we try to answer the questions. I've seen some people that, we asked specifically, hey, is there any thoughts about what you guys have on the stream? It's hard to just to move aside what's actually just chat and banter between everybody else, and what is actually take the money, forget growth. Hey man, I'm 32. I don't know what I would do right now if I didn't have a 9-to-5 job, unless I was starting another business. And that's kind of what this is. Like, hopefully Chris and I are able to do that. We're going to talk about that in Vegas as well. If we're able to get that runway started, I have a lot of thoughts about a channel just with me and Chris, and potentially others if we're able to kind of grow it. And that's something that him and I are going to talk about. I don't want to be too ahead because I have a lot of it in my head, and I want to share that with him before I kind of let it out to the world. But it's easy to say, hey, from your perspective, answer our questions, but it's hard to understand who's, while you're paying attention to Chris, listen to Chris and pay attention to the chat and understand fully, is that a question for me? Is that a question for somebody else in the chat? And so, it's to that point where, if you have 5 people in the chat and you're only communicating with yourself like I am now, it's a lot easier to be able to answer these questions. But if you're sitting here talking to somebody else, trying to moderate, trying to think of questions and be present, it's much harder to be able to moderate all the 20, 30 different people that are chatting in the chat box, as well as keeping track with. And if you see some of these big streams, right? Like, and I'm not saying you guys have to go down this route, but the people that are having 2, 5, 10,000 people watching their streams, like I'm thinking like the Whatever podcast, I'm thinking the Patrick Bet David podcast. It's like they have legit people behind the screens that are only monitoring chat, that are only monitoring. And it's like right now, it's just Chris and I aren't big enough, something like that. And eventually, my hope is we do get to that point where we're able to hire somebody full time to watch after the chat and bring up really good quality questions. But the easiest way that a lot of those guys end up having to be seen with people are asking questions is like super chat $50. And I'm not going to make you guys super chat. That's not what I want to do. But, if anything's ever a question, you could always ask on Twitter, X, whatever it's called. You could always try to message me. If I don't answer, I always answer DMs, generally speaking, unless you seem like a creep. You can always reach out to me on Instagram, all that sort of stuff. And we have plenty of moderators, my guy. I mean, there's a lot of people that I've given wrenches to in here. I think it's just very hard. It's easy from your perspective to say, oh yeah, just answer all the questions. But it's like, how many of the people that are chatting in here are just chatting amongst themselves versus trying to ask me or Chris a question? And so it's not the easiest way. And I think that's part of the reason why super chats were kind of created. But I don't want to force people to do that. Trying to think if there's anything else. No, Chris and I are going to discuss that in Vegas. Is there anything else? I thought Nextera's earnings were pretty good. I don't want to go into deep dive about it, but I thought it was pretty good. I'm glad I made the investment in Nextera. I have to listen to the last 30 minutes, like the Q&A section of their earnings call. Google, we talked about tonight. I really liked. Microsoft blew me away. Who else reported? I wasn't that impressed by Verizon. I know Chris likes it, and I do see a turnaround story. I don't know if I'm not going to be into something for that long a time. I know he could see a larger reversal than I can. It's just not for me. Just like the same with like people on PayPal. I can see a reversal. I just don't think it's going to go to 80 to $100 like people think. And then I don't have any Meta, so tomorrow's not my day. But Amazon, I'll be looking forward to that on Thursday. Let me see. Where do you think you would add to Google? Where would I add to Google? I might start writing puts. If I had more money, this is the problem, is like I stopped adding so much capital to the portfolio because I was saving up for a house over the past 6 months. And so now that house is out of the way, that's why I can bring $2,000 to Vegas and blow that, and I won't be upset. I could honestly bring like 4 or 5, but if I lost 4 or 5 grand in Vegas, I'd probably be upset with myself. If I invested in a stock, I could be okay with it. Throwing in a gambling, nah, not yet. I think the most I've lost is $2,500 in Vegas before, and I'm okay with losing $2,500. I would honestly, I just can't see myself buying above 100 right now. But honestly, if everything else in the market was doing well and Google was the only thing that was kind of out of place at 110, 115, I'd buy some. But I also have 380 shares already, and it's a pretty substantial position. If you don't have a position at all, and it's something that you're willing to start, I mean, I don't think that there's a reason why you shouldn't nibble on it personally. But that is between you and God. And I think you honestly have to think like what you're investing in it for, right? Are you investing in it for the short term, long term? Like if you're investing in it for the next 6 months, like I wouldn't buy it here. Like I don't think it's a great opportunity. But if you're investing in it for, say, the next 3-4 years, I think that it could go on a jog. It might go on a run. Will it go on a sprint? I don't know, but it'll definitely go on a jog or a run. And I think if you're holding it for the next 4 to 5 years, yeah, in 2028, 2029, this is going to be a different beast, man. It's going to be crazy. I mean, I see a lot more digital advertising going down. I see a lot more cloud going down. I see a lot of stuff. And their operating margins are just going to continue to get better. So, reports on Vici. I don't hate Vici. I recently sold out of not Altria Group. I did sell out of Altria Group a couple years ago, but I sold out of Realty Income. Put that in the SPY. Sorry for snorting. Put that into the S&P. And Vici is something I could get on board with because I think gambling is going to be there for a while. And, I'm not saying that just because it's a Joseph Carlson special. I think I'd have to look at the valuation of it. Last I checked, it's not overvalued by any means, and they do a really good job at capital management. So I don't have a per se, but I think overall it's an opportunity because I don't see casino areas going anywhere anytime soon. You have 100 Vici. Oh, you have 100 Google, but you want 200 Google. 700 and Horn High Yo Bet. I don't know that one. Austin, what's going on, my guy? Thank you. Austin's one of the members. I appreciate his patronage as always. Pod could get huge. Definitely supplies an underserved market here on YouTube. I don't think many other pods cover finance, market research, psychology in the same way. Chris goes at it way better than I do. And sometimes I think I let him drive more than he should, but we look at the same things. Like, I didn't look at the headline numbers. Like, I pulled up the balance sheet and I was diving through, and even on my Twitter, I was looking at it like, how the hell is Google making 80 odd $billion in cash flow from operations? And like, actually looking through the numbers versus most people are like, did they miss? Like, is it $1.55 a share? Like, $1.55 a share doesn't mean anything, right? Like, if you say, oh, that company made $1.55 a share, or let's just say, oh, they made $1.55 a share, bro. It's like, unless you know everything else about the company, it doesn't matter. But you're like, dude, can you believe that Google in the first 9 months of the year made $82 billion in cash flow from operations? Like, that's a number that's badass. Like, if you don't know anything about the stock market, you don't know how much, like, nobody cares that the EPS for Google was $1.55, right? The EPS is almost meaningless. What's more powerful, and I mean that because I care more about what the total earnings number for the company is versus the market cap. Earnings per share, it's like, it's nice if you're comparing quarter over quarter to show that you're growing profitability of the company, or that your overall EPS is going up and to the right, because people like to see that. But to me, I like to normalize everything, and I like to compare like firm numbers to firm numbers. And you can manipulate earnings per share by buybacks. And I want to know, is earnings growing? Is the net income growing? Because there's companies out there like AutoZone that will buy back 80% of the shares outstanding, 85% of the shares outstanding, and it looks like they've 7x'd their it looks like they've 63 or 70x'd their earnings per share, but in reality, they've grown their earnings by 7 odd percent, 8%, 700 to 800%, but they've also bought back 85% of the shares outstanding. So it's about understanding truly all the dynamics of things, looking through the balance sheet for me, looking through the net income statement, looking through the cash flow statement, looking through how much they bought back, looking for, are they issuing debt? Why are they issuing debt? Is it a good environment to issue debt? No. Like, for example, I looked, just the amount of, they don't have much long-term debt for Google, but they bought back $8 or $9 billion worth of debt, and they reissued $8 or $9 billion worth of debt. Thought that was pretty interesting. So I don't know why they did that, but I need to dive deeper into like the 10Q or whatever. But there's so much information that I think people just gloss over to truly understand if the company's in a fundamental position. But then they'll try to like automatically pin companies up against each other. Like, oh, this company makes more than this company, so X, Y, and Z. It's like, some of these metrics are arbitrary for particular industries. Like, you wouldn't use monthly active users, and if you're talking about railroads, you'd probably talk about tonnage or like cost per ton to ship something, or I don't know what's a good idea, but like monthly active users is good for technology stocks, but probably not best for like Coca-Cola, because you can't really measure monthly active users for Coca-Cola. It's interesting, man. It's like how you wouldn't probably use price to funds from operations for some companies, but you use it for real estate investment trusts and trying to understand the profitability of those. Just like you also wouldn't use net income for real estate investment trusts because of the depreciation aspect of the business. So you kind of have to understand some of these things. And if you don't want to put in that time, the S&P 500 is always there. And I honestly, the people that tell me that like, I don't have the time, I'd rather just put my money in the S&P 500, I respect them because they're confident, they've put a lot of thought into it, and they're not making blind mistakes. Versus I see some people out there that lie to themselves quarter after quarter and say, I'm going to get more involved, and they never do. And they're like, what did you do with the stock? It's like, dude, I sold that 3 years ago. I have some people that reach out to me like, you never told me you sold it. It's like, I never, you just asked me what stock I was buying. I didn't tell you I was going to sell out of it. When I sell out of it, it's like, it's up to you. I mean, I'm not the one that's pulling the trigger on you buying it. So I don't know. It's an interesting one. And I think another thing as well, it's like, I'll say something explicitly like, hey, I'm buying Rocket Lab. I'm okay if this goes to zero because I would like it to be a 20 to 50x sort of return. And I'm okay with losing 15 grand. And then you'll have people that are like, Matt bought 15 grand, so I'm gonna buy 15 grand. It's like, that's only 15 grand you have. This 15 grand position to Matt is like, he wouldn't even notice that it's missing. And it's like the people that try to follow people blindly into things is very scary to me. And I just want to caution people on stuff like that. Thoughts on Datadog, non-investor, just thought they're a solid company. I've only heard good things, but I really don't know enough about it. I really don't. Horn High Yo is a bets and crap. Single roll bet for an 11 to. Oh, so it's basically just if anybody craps out. Got it. Because roll on a 7 is winner, winner, chicken dinner. I normally just run the pass line, and then depending on how I feel, I'll either put money on the 4 and 10 to get a little bit of risque, and then actually, do I still have it open? No, I was playing craps a little bit earlier to kind of get into shape online. Not real money, but just talking through it. But anyway, with that, guys, I see people kind of dwindling off, and it's getting kind of late, almost midnight on the East Coast. I'm going to throw away some trash as well and then get ready because I got one more day to Vegas. Tomorrow night, I got to make sure I do some laundry. And yeah, it'll be a good time. So if I'm seeing you guys there, looking forward to it. I'll see you guys on Thursday, Friday. And if not, I'll be here tomorrow with Hot Chris again, probably talking about Meta or any other news that comes on. Talk to you guys then. Cheers.